What's going on, guys? Thanks for tuning in. This is Friday, closing out the trading week. We're going to go over, where we are on all of our trackers for our goals. We're also going to cover where we made money as well as losing money in all the right places. So, pretty exciting closing out week 3 of this channel. Before we dive into the channel tracker, and then after we'll look at the at Seeking Alpha, but I wanted to go over my fitness goal or weight loss goal for the year. I was trying to get down to 240 pounds. That was my goal for the year. I'm 6'3". So going into some body mass index calculators and some stuff on the United States Cancer Association, I realized that my fitness goal still had me listed as obese. So I didn't want to like lose weight to be still obese. I felt like that was a terrible goal. I mean, I thought it was good at first, but I can't set my goal to be less obese. So I'm changing my fitness goal of getting to 225 pounds, hopefully by the end of the year, which would be fantastic. Luckily, I'm doing the tracker, so I'll have a month by month gauge of how quickly I am losing weight and stuff like that. You guys have been super helpful in the comments, but 225 pounds, that is the new target there. But real quick, let's jump into the YouTube channel tracker and we'll go from there. All right, guys. So here we are in the channel tracker. Today is January 20th of 2023. It is the third Friday and third market week close. For my weight, I am currently at 290 pounds. So we're moving towards that goal, and we finally broke out of this 291 slump. I did also weigh myself in the middle of the day, so I'm excited. I think tomorrow when I wake up, hopefully I'll be at that 289 number, drop down to 10's place. That'd be great. And my total weight loss so far for the year is 8.7 pounds. So the balance in our trading account that we're using for the portfolio, we're up to $1,114.39. So some really solid growth there, and the dividends aren't really even kicking in yet. Dividend income earned, we've made $1.46. So dividends usually take either a full month or a full quarter before they start kicking in. So, nothing really in this category, but we'll have some dividends coming in the next couple weeks. Our total balance gains, right? We are currently down $5.41. Remember, though, this portfolio did start with a negative $30 balance, so we are technically actually up 24 bucks. But I'm actually good with the losing, and we'll talk about that in a minute. As we come over a little bit, sorry, I zoomed this in a lot. We're at 677 subscribers. So some pretty quick channel growth. Thank you to everybody who has subscribed to the channel. If you haven't, feel free to drop a subscription down below. But yeah, so really quick growth. I appreciate everybody for that. That's been stellar. Total views, we're at 23,042 views. Kind of a cool statistic to watch and see how that plays out. Not that it matters too much, but it's kind of motivating for me to see that like people are watching it, they enjoy it, stuff like that. And then lastly, total watch hours. Now, I actually question this. I think we're way behind because I posted a video yesterday that's doing really well right now. But they have us at 565 total watch hours, which is great. But I think we're actually at about 800 something watch hours because I have one video that I posted yesterday that by itself has 683 total watch hours on it. If you haven't seen that video yet on how much money you need to just leave and go to Thailand and live like a king, that's what I put out yesterday, and I guess the internet likes it, so that is good. But that's where we are in the tracker. Let's take a look at our Seeking Alpha. So, well, first thing I'll point out, because it's right at the top, we had a $15.29 gain today, so that was stellar. But really what we're focusing on here is just the overall growth in this portfolio. I'll start by shares and what we have the most shares of. Um, because it's kind of cool to see these shares piling up with only $5 to $10 a day into each thing. So like MPW Medical Properties Trust, we have 5.99 shares, and that's just from putting in $5 a day. So that's pretty cool. Hopefully we'll get to 100 shares of this by the end of the year, because then we can start doing what are called covered calls. And once we get into that, it'll be fun, and we'll do some videos on what that even means. But it's just a way to make even more money in your portfolio with your dividend paying stocks. JEPQ, we're not contributing into this. I just want to track its growth and kind of do that on the channel so I could do some comparisons between JP Morgan's NASDAQ index premium or equity premium and JP Morgan equity premium. So this is focused on the NASDAQ. I thought it'd be cool to do some side-by-side comparison and let you see the growth in the channel. AT&T, which I still think this should have been T-Mobile's ticker symbol, but whatever. Almost 4 full shares of that. We have a dividend that's coming out February 1st, so we'll get paid a little extra on that. NDAQ, again, this is another one that I'm not buying. It's just we're leaving it in the portfolio to watch some growth. Realty Income Corporation, we're at 2.3 shares. This is pretty exciting to me because this is one of my favorite holdings in all of my portfolios, including this one. We should see some rather accelerated growth out of this, and they'll be taking a snapshot for their dividend payout on the 31st. So depending on how many shares of this I have by the 31st is how many or how much my payout is. Judging by the trajectory of 2.31 shares, and it's the 20th, so we're 10 days in, 10 days in investing, I think that we should have at least 3 shares, which means when they pay out the dividend, I should make at least 75 cents, which is pretty good because we just started this 3 weeks ago. But yeah, so I'm hoping we'll get 3 full shares by the end of the month. SCHD, this is one of those bigger funds. This is Schwab's strategic dividend ETF. Basically we're at 2 shares of that. This pays out dividends, which is great. Well, they all do, but this is one of those big, solid dividend paying funds that a lot of people say this is all you really need to invest in. JEPI, we're at 1.36 shares of JEPI. Procter & Gamble, half a share. Pepsi, a little less than half a share. And then BlackRock, we are at 1/10 of a share because the shares are $741. But as I had said, we are losing money in all the right places. Okay. It's a weird thing to hear because a lot of us are just set on growth, not build out more income generating wealth. Okay, so that's what we're talking about. So if I sort this by year to date performance, we can see that medical properties is up almost 20% for the year. So since we started this channel, they're up almost 20%, which is awesome. This is one that I do expect to grow, and I expect it to keep growing. So yeah, the more the merrier with that growth. JEPQ, that's our second place. They're up 3.19. This one I expect to be kind of volatile. This fund has only been around for like 5-6 months. So I really have no expectations for it, right? I see that the Ford predicted yield is 16.4% in the dividend. That's good enough for me to throw that out there and see what happens. But it is good to see some growth here because I didn't really I have no expectations with this. This is more of a public observation. We'll see what that ends up being. BlackRock, surprisingly, we have some growth here. We're up 3% for the year. Realty Income Corporation also up almost 3% in the year. So that's a little surprising too, but that thing's a powerhouse. It's always been pretty good. AT&T up 2.88%. Jeppy, it's about flat. It's up a quarter percent. Now, this is where I say losing money in all the right places. So these four things beneath us are more of like economic investing staples. These are things that people invest in and you just hold for the rest of your life. And they're all designed to be relatively low maintenance. And they pay increasing dividend payouts regardless of the price of the stock historically. Okay. So NASDAQ is one of them. For this portfolio, we're starting off the portfolio this year, right? So if we're buying it a little bit cheaper every day, just taking that total average cost down day by day, eventually it will go back up or should go back up. And it's like we got all that stuff on sale. So, it's just a deeper discount day by day. And that's pretty exciting for something like the NASDAQ, right? I'm not in this for a year or two. I'm in this for 10 to 12, right? So when we come up here, we're down 0.5%. SCHD, this is again is Schwab's Strategic Dividend Equity ETF. So that's down 0.66%. You'll notice that as that drops, if you look at past videos, this yield or forward yield goes up. So as the cost of the stock goes down, because they pay the same dividend, I'm getting a higher percentage yield. So that's really, really good. You can see the opposite of that happening with MPW. My forward dividend yield is now lower than it was because the stock's gone up by 20%. So that's kind of the inverse of that. I would much rather have a higher percent dividend yield because I got the stock on sale. Because I care about how much these stocks pay me because that's real money, that's real income. A lot of people will say, "Oh wow, my Tesla stock just skyrocketed. Look, I made $10,000. Great. Did you sell it?" Well, no, of course I didn't sell it. I'm going to write it out. All right, then you haven't made $10,000. With growth stocks, you haven't made money until you sell it, right? Until you sell it, you're just still holding it because that'll come back down or could come back down and you get crushed. At least in this case, with SCHD or any of these, because they pay dividends, if it goes down, I'm still going to get paid my $3 to $4, you know? So I made money. That's actually making money. Here's a check. I didn't have to sell to get that money. It just comes in. That's the benefit of dividends. So Procter and Gamble, this is Procter and Gamble and Pepsi are probably the most exciting that they're actually legitimately down, right? So we have a 6.03 decline on Procter and Gamble, and we have a 6.11 decline on Pepsi. You'll see that again, these four dividend yields are now higher than they were. So even though Pepsi costs less to buy a share now, I'm still going to get $4.60 per share for the year. So if I can get that $4.60 for less money, I'm in. And that's what we're talking about here. So again, losing money in the right places. These two stocks, right? They also have the highest amount of years of growing their dividend. So Procter and Gamble, they've consistently raised their annual dividend over the past 66 years, guys. How much nonsense has the market been through in the past 66 years? We're talking like the Cold War. We're talking, a lot of stuff. We're talking the dot-com crash, the Y2K. We're talking, 2008, everything like COVID, all that stuff. They never shorted out their dividend. They always grew their dividend for 66 years straight. Same thing with Pepsi, 50 years straight, guys. 50 years straight. That's insane. That's it's unbelievable to me. That's since 1950 or sorry, since 1973. That's what that means. They've paid more and more money every single year, which is awesome. So yeah, losing money in all the right in all the right places. Please, I hope these continue to plummet. I don't care that their total value has gone down, because I care about getting paid. So that's kind of the goal. Um, but that kind of wraps it up. I mean, as far as the market this week, we made some predictions. They were right, so that was exciting. I like that's always kind of fun. I think MPW is going to continue to rise on market open. There's been a lot of good news about them lately. AT&T took a slight little dip and then bounced right back. Um, what's it called? BlackRock right up here. This has been all over the place this week. It's taken some nosedives, then it's popped back up. I mean, this is kind of all over the place. It's dropped to 738, then it went up to like 760, and then it dropped down to 729, and now we're sitting back at 741. So kind of all over the place. I'm cool with it though. They pay a dividend, and if we're buying it every day. So we bought it one day for 760, which was a little expensive, and then 2 days later we bought it for like 730. So I'm cool with that. That's easy. I didn't buy it too high, didn't buy it too low. I just bought it every day. Um, I'm not a wealth manager, credit counselor, financial advisor. I am just a guy investing for motivational and entertainment purposes, sitting in a bathrobe in an office that's heated by crypto miners. So but if you want to get into investing, you find this interesting, or you've been looking for a platform to use yourself, I do have a link for Sofi investment down in the comments. Super easy platform to set up automated investing. Into any fund or whatever you pretty much want. But yeah, again, thank you. If you haven't liked, subscribed, threw in a comment down there, I'd love to see what you think. And then with that, roll the outro.